off of our Chapter 4 video lecture, we're going to learn how to post journal entries to what's known as the general ledger account. When you think about the accounting cycle, it is a series of steps that take place during the accounting period in order to take everyday business transaction and turn into useful accounting information. Our focus today is on step 3 of the accounting cycle, how to post transaction to what's known as the ledger account. So when you hear the term posting, perhaps you're saying, what is posting? Posting is the process of taking data from the general journal and record it into the appropriate ledger account, and we're going to practice those steps today. So a ledger is a separate form that's used for each account, meaning that every account title has its own separate ledger account. The purpose of the ledger is to keep a running balance for each of our account titles. So if the question is, how much cash does a company have on hand? They'll look at their cash ledger account in order to find that information. Each account title has its own separate ledger account. So if you have 25 account titles, you're going to have 25 separate ledger accounts. Here we see the actual format of the ledger, where you'll list the account name and the account number. You have a date column, a description column, post reference column, a debit and credit column that records the transactions. Then we have a debit and credit column to show the actual balance of the account. So we're going to review what's known as the 5 steps of the posting process. So you ready? Let's go. Okay. So the first step of the process is to record the date of the transaction into the date column of the ledger. Again, step 1 is to record the date of the transaction into the date column of the ledger account. So our first transaction took place on the 7th of November. So we're going to record the date here in the date column of the ledger. Now notice that this is the ledger account for the equipment account. Every account title has its own separate ledger. So for this ledger, we'll only post those transactions that impact the equipment account. The cash account has its own separate ledger, and we'll post the cash transaction into the cash ledger account. Okay? So again, step 1 was record the date of the transaction into the date column of the ledger account. The second step is to record the journal page number into the post reference column of the ledger. So notice that we're on page 1 of our general journal. So in the ledger account, we're going to record J1 in the post reference column, which stands for page 1 of the general journal. So our second step is record the journal page number into the post reference column of the ledger. Step 3 is to record the amount of the transaction into the appropriate debit or credit column of the ledger. Again, record the amount of the transaction into the appropriate debit or credit column of the ledger. For this third step, all you're doing is copying information from the journal into the ledger. Whatever took place in the journal, record it on the same side of the ledger. So for this first transaction, the equipment account was debited for $5,000. Therefore, we're going to record the $5,000 on the debit side of the equipment ledger account. Again, we're just transferring the information from the journal into the ledger account. Step 4 After you have posted each transaction, determine what is going to be the new running balance in the ledger account. So for this third transaction, all right, look at step 3, we debit the account for $5,000. So as of right now, the equipment account has a debit balance in the amount of $5,000. Recall the purpose of the ledger is to keep a running balance for each of our ledger accounts. Therefore, after we post each of these ledger transactions, we'll then determine what is going to be the balance in the ledger account. Now, once you have recorded the transaction to the ledger, the last fifth and final step, we're going to go back to the journal and record the account number in the post reference column of the journal. Again, the fifth and final step is to record the account number into the post reference column of the journal. This lets us know that this $5,000 transaction has been posted into the equipment ledger account. So in the journal, the post reference column stays blank until you have posted that transaction into the applicable ledger account. Notice that next to the cash account transaction, the column is blank. That's because this cash transaction has not yet been posted into the cash ledger account. So again, let's review the 5 steps of the posting process. Step 1, record the date of the transaction into the date column of your ledger account. Step 2, record the journal page number into the post reference column of the ledger account. The third step is to record the amount of the transaction into the ledger. Again, we're just copying from the journal. Whatever took place in the journal, recorded in the same side of the ledger account. Once you record each transaction, step 4 is to determine what would be the account's new running balance. As of now, we only have this one transaction for $5,000 that gives a balance of $5,000 shown on the debit side. And the fifth and final step, come back to the general journal, record the account number in the post reference column of the journal. This is to indicate that this transaction has now been posted into the equipment ledger account. Okay? So whether you're posting to one account or to 25 accounts, the process is the same. You will go through those same 5 steps every time when you're posting from the journal into the actual ledger account. Okay. So in the actual ledger, we have what's known as the general ledger, which is a combination of all of the individual ledger accounts. When you list the ledger accounts, you're going to list them in a certain order. You first list your asset accounts, followed by your liabilities. Next, you list your owner's equity accounts, followed by your revenue accounts. And last, you're going to list all of your expense accounts. So when you are preparing the ledger, again, this is the order of the account title: assets first, liabilities, owner's equity account, revenue accounts, followed by your expense accounts. Okay? We're going to come back with a third video for chapter 4 that talks about how to make correction of errors made in the journal or errors made in the ledger.